Hey there, it's Seb Frey here with your 2022 real estate market forecast. Now, if you're new to watching my videos, you probably don't know that at the beginning of every year, I like to make a video for my clients where I talk about what to expect in the coming year. And this year, I'm a little bit late out of the gate. I like to get these done normally in the first 2 weeks of January or so, and here we are, the first week of February. But actually, there's a silver lining to that, and I'll get into that in a little bit. But before I talk about 2022, we have to talk about 2021 because that year, last year, was absolutely nutso. It exceeded, I think, anyone's imagination for what that year was going to look like. So throughout the state of California, all of California, the entirety of the state, the median sale price in California rose 20.3%. That's the entire state, man. I'm talking like Inland Empire, Plumas County, right? Like places, like far, far, far from the expensive areas. Even those areas jumped up considerably with an average price increase of 20.3%. Now, here in the greater San Francisco Bay Area, we saw prices that were oftentimes well in excess of 20% over the prior year. Many neighborhoods saw 25%, close to 30% above the 2020 sale prices in 2021. It was simply an amazing year. And I think the question everybody wants to know is like, what caused that? Why did prices jump up 20.3% on average, and in many parts of the greater Bay Area, 25, almost 30%? And there is one reason, there's one culprit for it, I have to say, and that is lack of inventory. There were just very few homes for sale in 2021. And another big factor out there was actually inflation, right? So inflation for 2021, it ran 7% at an annual rate. So a big chunk of what we saw there was actually just inflation. And any year there's inflation. There's usually between 2 and 2.5% inflation somewhere in there over the past 10 years or so. So we're maybe 3 times higher than what we've seen in the past. And that does account for some of it. But clearly, the big reason why we saw such a price increase was just there was nothing for sale, and there were so many people looking to buy homes. Now, why were people looking to buy homes in such great numbers, right? Well, I think it has to do a lot with the pandemic, and I'm really tired about talking about the pandemic, and I'm sure you are too. But the fact of the matter is, a lot of people are working from home now in greater numbers than ever before. And when you're spending so much time at home, it's very common for you to want, more and better living space if that's where you're going to be spending, 90% of your, time or whatever, right? So you have a lot of people looking for an upgrade, and we also have people who now don't have to live so close to the office, but they have to live close-ish to the office. So a lot of these big employers, which are paying this big money to people, Apple, Google, Facebook, and there's hundreds more that are in the same category. They are happy to have their employees work remote for now, but they do say that if you're going to be working remote, you need to be within a certain radius of the office, and if you exceed that radius, then they're going to cut your pay down, right? So a lot of people, in order to maintain their pay, they feel they want to live a little further away, but not too much further away because they don't want to get a pay cut. So that's why you're seeing a lot of growth in these secondary markets like Tahoe, Sonoma, Santa Cruz, and Monterey. Because people can live there and still be within, a 90-minute drive or 2-hour drive, maybe at the most, to get to the office. So we're seeing like a lot of this, sort of money, this sort of splash out from the core of the Bay Area into these other markets. And you're seeing that phenomenon all throughout the state. Maybe people who were living in Sacramento before, maybe now they're going a little bit north or a little bit east, and people who are in the south, who knows where they're going, right? So that's the story of 2021. So now what's going to happen in 2022? Well, I'm glad you asked because you're in the right place for that. The California Association of Realtors, every year, they make a wonderful presentation about what's going to happen in the coming year. And in this year, the California Association of Realtors has predicted that home prices are going to be up in the neighborhood of 5.3%. From the entire state, right? Again, Plumas County and Inland Empire and all these other places farther away from the actual coast. And that's what we're going to see as a sort of average across the state. Now, what's going to happen here in the greater San Francisco Bay Area, right? What are we going to be seeing in terms of home price appreciation? And that's a really good question. And I went and I looked to see if I couldn't find any data which I could point to, which will tell you closer to home what we should expect in terms of home price appreciation in 2022. So I wasn't able to find that kind of granular information through for most communities in the area here. Interestingly enough, our good friends at Zillow, they do have like a forecast, right, for many different areas, and they put it out all the time. And so I went and I looked, and I couldn't really find any forecast for Zillow. I mean, they'll say like no data available. They had no data available for San Francisco. They had no data available for San Mateo County. They had no data available for Monterey County or San Benito County, for example, Contra Costa County. Could not find any forecast from Zillow, but I did find two forecasts. And so the one forecast I found was a combined forecast for Sunnyvale, Santa Clara, and San Jose, right? So they are predicting that in that area, home prices will increase 13.5% in 2022. And the other one I found was in Santa Cruz and Watsonville, the Santa Cruz, Watsonville metro area. That area is supposed to go up somewhere around 12.3%, I believe is the number for that one. So we are seeing a significant price increase again for 2022 versus 2021. But it kind of begs the question, like, how is this even possible? How, after a year where prices went up 20 or 30%, are they going to go up another 10 to 13.5% or whatever it is? With affordability already being so bad, just how is this even possible? I'm glad you asked, and I think the story is as old as time. There are the haves and the have-nots, and there's we have the haves, and they're having a lot more than ever before. There's a certain group of people, and it's a fairly large group of people who are very well compensated, who have stock options, which have or stock grants or whatever, which have increased in value substantially over the past several years, and a lot of these people are now sitting on millions of dollars in stock. And what's a good idea if you're sitting on millions of dollars in stock, especially if a lot of it is just pumped up in value recently? You diversify. I hear this in my weekly broker meeting a lot. My brokerage is in Los Gatos, and we have a lot of very well-to-do clients. And you hear this from other agents in the office. People are looking to diversify their portfolios, and so they're taking some money out of stocks and putting it down onto housing, right? Because housing is something you can actually enjoy, right? You can actually go to your house on the beach. You can't go to your Netflix stock and have any fun with it, but you certainly can go down to the beach and hang out for the weekend and really begin to enjoy some of that lifestyle that you have earned. So that's what we're seeing a lot of. We're seeing these people who are putting down $1 million or just maybe $500,000 or maybe $2 million on houses, and the prices are just marching up and up and up. And and they'll have a small mortgage. Fannie Mae and Freddie Mac have increased the mortgage loan limits for most areas of the Bay Area to $970,000 in 2022. So if you put down $1 million, you can get a loan for $970,000 and get a nice $2 million house. Or you put down $1.5 million and get a house for $2.5 million. And guess what? These borrowers who are borrowing that $1 million, they're not very sensitive to the interest rate, whether it's 3.5%, which is it is today, or if it's 3.9% or 4.3%, 6 months from now. That's not really going to make much of an appreciable impact where they feel like a change in their lifestyle because of that higher interest rate. So even though interest rates are projected to increase in 2022 versus where they were in 2021, it's not probably going to have much of an impact at all on home price appreciation. But there are some other things that are probably going to have an impact on home price appreciation. And one of those is the lack of stimulus. So, a lot of what happened in 2021 was because there was this massive, fiscal stimulus from the Federal Reserve, this pandemic money. Well, the pandemic money is basically all gone now. That's pretty much dried up. So we're not going to have that driving the economy anymore. The other thing is that the Federal Reserve has announced that they are going to be, continuing to taper down all their bond buying. They've been buying dozens of billions of dollars of bonds, including mortgage-backed security bonds, for several years now, and they're tapering that down because, the Fed has two jobs. Two jobs the Fed has. One is keep unemployment low, and number two is keep inflation low, right? So right now, unemployment is pretty low, inflation is pretty high, right? So the Fed has to do its other mandate, which is to get down inflation, and they're going to do that by tapering that the buying of those bonds, and they're also going to do it by increasing interest rates, which need to be increased because the economy was super hot in 2021, right? Like GDP was 6.1%, and a lot of economists, the consensus seems to be around the economy growing roughly at half the rate in 2022 that it did in 2021. So we should be looking at GDP growth of around 3%, but that's still likely to keep the fires lit in terms of the real estate market. We're probably still going to see more hiring, we're probably going to see more wage increases, and we're probably going to see a continuation of work from home. But we're not going to see, I don't think, is a lot more inventory coming on the market. In fact, I began this video by saying it's kind of good that I'm starting this so late in the year, because January is now behind us and we have experienced the first month of 2022. And I have to tell you, it was brutal out there for buyers. There was not a lot of inventory coming on in January. There really hardly ever is a lot of inventory coming on in January. But there was slightly more inventory coming on this January compared to last January in most communities in the greater San Francisco Bay Area. But even so, inventory did not build. There is the same nothing for sale at the beginning of February as there was at the beginning of January. That's because homes are selling as fast as they are coming onto the market. It is amazing that inventory fails to build. In fact, in some areas, homes are coming onto the market faster. Homes are selling faster than they are coming onto the market. They're eating into what little inventory was left over December. It's really a tight market out there. And I don't see anything that's going to come along to change that inventory issue that we have. It just seems that we're in a pattern. A lot of people just don't want to move or figure they can't move. They say, well, if I sold, where would I go? And that's the age-old question because, where's better than here? There are some places that are competitive to be sure, but I think it's like there's no clear-cut answer for too many people, and they're just content to stay in their houses for now. And then those few people who are selling are reaping a significant reward. So that's what we're going to see in 2022 is a continuation, I think, at least for the first half of 2022, which is not many homes for sale and a lot of buyers who are desperate to get into houses right now, especially because, these millennials are really coming into the age group where they have the kind of incomes to buy homes. And millennials, if you did not know this, are the single largest demographic group in the United States. So we're going to be seeing a very robust real estate market in 2022, at least the first half of 2022. It's so hard to predict, 10 months out in the future. But for the next 5 months, I'm pretty comfortable that the market is going to continue much in this very same pattern. All right, well, that's it for my 2022 real estate market forecast. I do hope you have enjoyed it. You know what I would enjoy? I would enjoy it if you would write a comment here. If you're seeing this on YouTube or Facebook or wherever you're seeing, I would love to comment and to hear your thoughts about this. And of course, if you want to share this video with anybody, that would be terrific as well. Or give me a thumbs up or a like or something like that. That would be terrific. All right, that's it for me. But listen, I'm going to have more videos coming out fairly soon here in 2022. So keep your eye on my YouTube channel. And of course, do me a solid and subscribe. That would be super awesome as well. All right, thank you so much for watching. Have a great year.